All right, good morning to all. We won't hold you up since we were waiting for a few others to come in, but I think we should begin. Welcome to Scorebucks County's Financial Business Planning Basics Seminar. My name is Linda Zangrilli. I'm the chapter chair for Scorebucks County, and I'm excited to have two of our people with us today to present this program to you. Just at first, a few housekeeping rules. Anyone who has a question, will address all questions at the end. Please put it in the Q&A section, not the chat, but in the Q&A section, and we will answer everything at the end of the session. Secondly, you don't have to take furious notes because everything is being recorded and the slides and the recording will be sent out to all those who register. So with that, if you'll just allow me a few minutes of SCORE promotion, we have to promote the group that we belong to. Who are we? Scorebucks County is a national nonprofit organization. We have 350 chapters all over the country. Some 13,000 members belong to SCORE. We have a very, very simple mission to help small business grow and thrive. We are a resource partner of the Small Business Administration. Our Bucks County SCORE chapter covers the entire county. We have 3 offices: Quakertown, Lower Bucks, and Doylestown. We have 50 members in our chapter with varied experience. So no matter what type of advice you're looking for, I'm sure we have the people in the chapter that can help you. We accomplish our mission through free mentoring services. Yes, you're right. I'm right. Free. I said free. It doesn't cost you anything to request a mentor. Just go to our website at buckscounty.score.org. Hit the button that says request a mentor. We're happy to help in wherever you are in your small business planning, whether you're just starting, you have an idea, or you'd like to help us, let us help you grow and become profitable. We also do it through seminars like this. So financial basics are key to anyone becoming profitable. This is why we put on free seminars. So if you're interested in 2 things, either becoming a client or becoming a member and helping us with our mission, please visit our website at www.buckscountyscore.org. In addition, you can call us at 215-943-8850. With that, I will now introduce the seminar chair for Scorebucks County. His name is Ed Torello, and Ed will take it from here. Thank you.
Thank you very much, Linda, and welcome to everyone joining us here for our webinar. This, just so you know, is one of 35 webinars that we've put together for the year September through September. It's the way we operate. All of our webinars, as Linda said, are recorded. And if you should need to look at some of the older ones, you can do so at our library. With me today is Richard Kroger, who's been a member of Scorebucks County for over 4 years. He's also on the executive committee, and he's the chairman of the Scorebucks County chapter. Prior to joining us, Richard worked for 30 years plus in the banking and commercial finance areas. He's intimately he was intimately involved in all banking and financial aspects, and as such is a very valued resource. He also had a lot of experience with the Small Business Administration and the USDA, guaranteed loan programs, both in Pennsylvania and New Jersey. With that, I'm going to turn it over to Richard to start the presentation, Financial/Business Planning Basics. Richard?
Ed, thank you very much for the introduction. I appreciate the information and the opportunity to speak to everyone today. Also, thank you for taking time out from shoveling snow to log into the webinar this morning. I don't know about you folks, but I can think of many more enjoyable and productive things to do than shoveling snow. But that's where we are. That's what we have to deal with. I got an email from someone this morning who reminded me, I guess, happy Groundhog Day, grab a shovel. So, excuse me, for those of you who need to shovel snow, I feel your pain, shall we say. Before a couple of kind of follow-ups, one particular follow-up to Ed's introduction. The SBA loans that I sold when I was working were these traditional 7A and 504 loans. They were not the Paycheck Protection Program or the economic injury disaster loan programs that you've heard about lately in the market. Thank God. But if there are follow-up questions that anyone would have, I certainly would address them. My contact information will be on the first slide that you see, the phone number and the email address. But I did want to mention that. And also I want to mention, this will be something of a challenge for me because I'm used to talking to people in a much more interactive setting where I'm usually in front of a table or sitting down at a table and I have the people in front of me. And it's a much more, as I said, interactive question going back and forth during the webinar. So this is something of a change for me, something, excuse me, that will be the way things are right now. As to come back to what Linda was saying, this is the format that we're using for the workshop presentations that we do. The disclaimer, I should mention this just so that we all try to stay on the same page, and I'll just read this briefly. The content of this webinar is for general information purposes only and should not be used as a substitute for professional accounting, tax, or legal advice from qualified professionals in those fields. The webinar content represents the views of the presenter and do not necessarily represent the views or advice expressed by the Service Corps of Retired Executives. So having said that, here we go. Okay, entrepreneurial myths. You can see the information on the slides, and I'm sure when you take a look at them, there will be others that you certainly more than likely can add to the list. A couple of comments that I wanted to make, excuse me. The second one, I'm good at this, I should start a business. Okay, my thought about that is that's fine, but is there some type of restriction that would prevent you from starting the business or forming the business that you want? Be advised that there is such a thing as a covenant not to compete. It depends on the industry and it depends on the individuals how much they choose to enforce that, but it can be a stumbling block. It is one of the points that I usually mention to people or to clients. Well, certainly when I was doing SBA lending, it was something that I would tell the people right from the beginning, especially if it was a business that they wanted to start that was similar to the business you were working in as an employee. So just be aware there might be some type of limitation, either in terms of time or in terms of a specific industry that would prevent you from possibly starting the business that you would like to start. The 1, 2, 3, fourth one is one of my favorites. You won't have to work so hard if you work for yourself. Anyone who's in the audience who owns their own business or who operates their own business knows that that's not the case. That actually the number of hours, especially in the beginning, that the number of hours in the beginning are going to be at least as much as when you were working, if not more. Go down a couple to where you see you'll be able to deduct everything from your taxes. This was a favorite of mine when I was talking to someone who wanted to buy a business, because one of the requirements that my credit people had were to the seller had to agree to release financial information about the business to see what the cash flow was. And I would tell the people that you need to produce that information. And then when I get the tax return, whether it's a corporate return or a Schedule C, there's little or no income, or in some cases, maybe even negative income. And it's, and so my conversation with the seller would be, you can't have it both ways. You can't expect to operate your business and, take every possible deduction and show very little income, and then turn around and want to sell your business for a premium. It's just not going to work that way. So that's one of the examples or comments that I wanted to make about that. Oh, and the other thing, I should maybe stop at this point. Even though I've not worked in banking for a little bit of time, and I think I've reprogrammed myself, I sometimes slip back into the vernacular of using bank terminology. So I will try my best when I do that to make sure and explain to you what it is that I'm talking about. If there are any particular questions, please make a note of that, and I'll be happy to come back to them later. The last point, we're good friends, we'll work well together, has been a challenge, or has been a challenge in a couple of cases that I have seen, because to operate a business effectively and profitably, especially if there's more than one owner involved, you need to have diverse experience and skill sets. The best example that I can give you in this particular case is one of the earliest and longest running SBA loans that I did was for three individuals who were working at a restaurant, had an entrepreneurial itch that they wanted to scratch, and they decided they wanted to start their own business. They wanted to either buy a restaurant, an existing restaurant, or start one. And one of them was a professionally trained chef. He had been completed Culinary Institute training at the CIA. The second person was a sous chef who would help prepare the meals for the chef. And the third person was used to working the front of the house, quote unquote. She was the hostess, whatever you want to call it. So you've got three people with different backgrounds that had also been working together for a period of time. And it was a large loan. When the dust finally settled, it was close to $1 million loan. And the restaurant, we did the financing for the restaurant to get it up and going. It's located in this area, in the Peddler's Village area. And as far as I know, the restaurant is still in operation. And it's, if you would call it a success story, because there's been a period of time that's gone by since the loan was done. And the good thing is that the business is still operating. So the point is that the more people that you have involved or thinking about having involved in your business, fine. But as I said, you need to have different skill sets in order to be helpful and to be successful. Moving on to the next slide, reasons why businesses fail. And this is, it's a short list, and I'm sure that there are people in the audience who could probably give me another 10, if not additional reasons why whatever they're trying to do, whatever the business wasn't able to be successful. Number 3, lack of a business plan is something that I'll talk about in some detail later. I wanted to mention 4 and 5, and I guess 6 also are kind of related. The question is, are you keeping track? You've got the business up and going. Are you keeping track of how it's doing, what the operations are, how it's performing? or is this kind of an ego trip, which is really what number 10 is focused on? The fact that you think you can do everything yourself. Number 8, ineffective marketing, including your website. You can take that and also comment that line, and also include all current social media outlets, whether it's LinkedIn, Instagram, Twitter. But it's one of those things, those are outlets right now that for your business, everyone is looking for. It's more or less kind of a given. And of course, the website is a basic. I mean, these days, the website is the basic. So you can take that number 8 category and expand on it from that standpoint. There's one, the first item I would mention as an addition to this slide was prepared before the virus. So obviously there are some significant changes that have happened to local businesses and also to the national economy that have been caused by the virus. And you could say, add something like unexpected results or unexpected economic conditions. And I just learned recently, for example, about a donut shop that opened in the local area in the, excuse me, early in the first part of 2020, just about a year ago. And of course, we all know what happened in the middle of March. And unfortunately, that donut shop wound up not being successful, wound up having to close their operations. I have one of the clients that I'm working with is a woman who opened a smoothie drink franchise. She opened the tail end of 2018. 2019 was really not working with and trying to knock down her learning curve about how to operate the business. She was starting to get some traction in the tail end of 19 into the first part of 20. And of course, what happened, the virus. And so she's been going back and forth about being opening, being closing, how she's had to reprogram herself and also change the way she's trying to operate her business. So those are all, a couple of recent examples of things that have come about through no fault of their own, just whether you want to call it bad timing, lack of timing, whatever the case might be. It's another example of, unfortunately, reasons why businesses fail. Moving on to the next slide. The next few slides are going to be, and this is, I should have said this from the very beginning, I reversed the sequence of what I want to discuss. I'm talking first, let's say, from the business planning standpoint, and then I'll shift later to the financial planning standpoint. But continuing going forward from the business planning standpoint, an overview of the business model canvas, and of course you see our shameless plug, which is anything that we can do to try to promote ourselves and to increase the awareness in the marketplace of SCORE is certainly something that we're willing to do, or at least try. The business model canvas, in summary, deals with the thoughts, concepts, ideas, plans of what are you planning to do, and how are you planning to do it in a way that will be successful. And I'm summarizing significantly, but excuse me. That's the business model. And this is also going to be, I'm not going to go into a lot of depth about the business model canvas. The objective of this part of the webinar is to give you an awareness or some basic information about what's in the canvas. One of our associates, Kathleen Donahue, will be doing a webinar on February 22nd, that will focus exclusively on the business model canvas. And I would suggest anyone who hasn't enrolled in that workshop before, up till now, should seriously think about registering for it. I'm sure that what Kathleen has to say will be very, very beneficial and will, expand on what I'm going to mention to you today. But as I said, this is just going to be, you want to call it a stick your toe in the water, that kind of thing. So let's see, business model. The business model describes the rationale, how an organization creates, delivers, and captures value. I have a longtime friend of mine who is since he stopped working, he's always been a motivational speaker. He has given, he's won numerous awards locally and nationally from the Toastmasters International Group. He has published 2 books. And so prior to the webinar today, I sent him the slides and I asked him, excuse me, to critique the slides and give me his thoughts about them. And I told him, if you don't like, it's pluses and minuses. And this particular slide is one of the ones he loved. There's one of the ones I'm coming to that he was less than thrilled with, which I'll tell you about in a minute. But this particular one he's liked because one of the reasons was it was so succinct in what it said in describing the business model. Okay, all right. Business model canvas, the difference, you have the idea, is there an opportunity, and is this a business? Can this, and then underneath, of course, the business model canvas going to the business plan. I'll jump in right now and say, outside of the business block, there's also a question, and this has come up in a couple of cases with clients that I've worked with, is what you're doing a business or is it a hobby? Because if it's a hobby, I'm still willing to work with you. I'm still willing to try to take what you're thinking about doing or what you're doing and converting it to a business, but it's more of a challenge. It's more of a challenge to the individual. It's more of a challenge to me personally to try, because there's more work involved from getting, and I have actually that situation right now with one of the clients that I'm working with. And she said, yes, it is something that she's doing as a hobby, but she wants to take it to a business. And so, once again, as I said, it's not a problem for me. There's more involved. It's just that I need to know up front if this is something that is an existing business or if the plan that you have actually makes sense. If what you're doing is not generating any revenue or it's not generating any sales, you have to kind of seriously ask yourself, where am I going with this? And what can I potentially take this to? Way back when, excuse me a minute. Way back when, excuse me, I was working for someone and one of his, he had a few mantras, let's put it that way. And one of his favorite ones was, what are you doing and why are you doing it? So, I would just kind of throw that in and inject that right now. As far as some points I want to mention as far as the business plan, because to me, there are 2 completely different type of documents. The business plan is primarily used for people who are in need of financing. You're going to apply for funding somewhere, and especially if you're a startup or an early stage business, more than likely you're going to wind up having to go into the SBA lending program, and there's a requirement from the credit people that you have a, quote, business plan, unquote. What am I talking about? What are the potential components of a business plan? To me, there are 5. First is an executive summary. First page of the business plan is an executive summary. It's a couple of sentences or maybe one paragraph describing what it is that you want to do. You know, so and so, introduce yourself. I'm so and so. I'm thinking about starting whatever the particular business might be. I think I'm going to need to borrow X amount of dollars, and here's what I'm going to use the money for. Those kind of general thought. There's no standard format. Let me emphasize that. There's no standard format to a business plan. There are a number of templates that you can use as a guide. I have a generic business plan outline that I've used for longer than I want to think about and longer than I want to admit, but be that as it may. And you can go to the SBA.gov website to find templates for business plans. You can probably just Google business plan templates and find all kinds of information about them there. So, but the first part is the executive summary. The second part of that is the narrative, where you're taking what's on the first page and you're expanding and running with it, giving the person much more detail about what you're thinking about doing, kind of how you're planning on doing it, that kind of thing. And once again, there's no standard length as far as the narrative is concerned. One of the things that I have told people that are in SCORE that are preparing business plans, one of the things that I'm willing to do is to help them. I'm willing to review them. We're not supposed to do the work for you. We can't tell you what to do, and we're not supposed to do the work for you. We can counsel you, we can advise you, we can make suggestions to you, but the important thing to consider is that, we're looking for you to, the client that we're working with, to do the work. Okay, so that's the first part of the plan. Next part of the plan, and this is when I mention this, everybody groans and says, "Oh no, Dick, do I have to do that?" Guess what this is? These are the projections. What do you think the revenue and expenses are going to be for the business that you're planning on starting? And I can't tell you how many people, when I was doing SBA lending, would do the projections and they'd give me three years worth of information in 3 columns: revenue, expenses, and, you hope, a profit at the bottom. And my credit people would tell me, "Dick, take it back. They've got to redo it. They've got to break down the yearly results into 6-month increments, and best case would be 3 months or maybe even month to month." Once again, there are templates available, website templates available. There are anyone who's proficient in Excel can set up a worksheet that will break down that kind of information for you. Excuse me. But my credit people always wanted more details as far as the projections, what the revenue and all of the expenses. And I tell people from the expense side to think about whatever potential expense you think you can incur. You're probably not going to cover all of them, but cover the main one. What do you think it might cost for rent? What do you think it might cost for payroll, for your supplies, for advertising, for marketing, whatever the case might be. Transportation expenses, depending on the type of business that you're planning on starting, or the type of service that you're planning on offering. But break that down as much as you can, and it never fails. Somebody either trying to sell me a mortgage or telling me they're apologizing for their electric charges. So, excuse me, pardon me. So those are the projections, my thoughts as far as the projections until I got sidetracked. Next part of the business plan would be the assumptions. You've done the projections, you've projected the revenue and expenses for the business. Give me an idea of what you thought of. Where did the numbers come from? What were you thinking about in creating the information that's on the business plan? On the projected results, rather. And finally, the last column, or I'm sorry, the last section is what I refer to as miscellaneous. Miscellaneous documents, whatever you want to call it. And the one item that I always suggest to people that they include is their resume. Put them, get a, if you, I mean, we hope, that you have a resume. If not, you can try to prepare one. But keep in mind that the business plan you're preparing is going to be looked at and reviewed by other people. So you need to be able to kind of tie or show how your previous experience and skill sets are going to match the type of business that you're planning on starting or the type of business that you're operating and that you're applying for funding. So you can start with the resume. Some people include copies of their degrees. Some people have included copies of recommendation letters from previous employers. Some people, if it's a food-related business, have included with that a draft of what their menu is going to be like. Once again, there's no particular format or kind of A, B, C, and D. It really depends on the particular situation. Any document that you think you can make a copy of and include in the business plan that will help plead your case, if you would, or help present yourself, well, then those are the kinds of things, once again, and keep in mind, this is one person's opinion that you're hearing. You could talk to other people. You can talk to 3 other people and probably get six different opinions. But for purposes of the webinar today, this is what I'm suggesting to you. Okay, moving on, finally, you're probably saying finally, moving on to the business model canvas. We have here a summary of the information on the canvas. And this is the slide that the person that I mentioned before was less than thrilled with. And what I told him was, well, you should see the actual slide if you want to see information that's kind of jammed on the slide. But there are 9 separate categories on the business model canvas. There are slides that pertain to each of the particular ones that you see. And but what I'm going to do right now is just kind of summarize this for you. And right in the middle, you see, excuse me, where it says, what do you do? What's your value proposition as the starting point? And what I'm going to just highlight there, the bullet points within that particular module. What value do we deliver to the customer? Which one of our customers' problems are we helping to solve? What bundles of products and services are we offering in each segment? Which customer needs are we satisfying? And what's the minimum viable product that we can offer someone? In each of the 9 categories, there are different bullet points like that. And once again, you'll see from some of the sources that we'll be coming to in a later slide that you can go to those sources to find a picture of the actual business model itself and the other information that's contained in the model. But one of the basic points that I wanted to mention are a couple. From the standpoint of starting a business, is this the right time for you to be starting a business, either personally or financially? I'm kind of dovetailing a little bit back to some of what we talked about, what I mentioned before, and also something that I'll be covering later. These are one of the things that you need to think about. Is this the right time? Are you really ready? Are you really prepared? Have you started to prepare for this to either start your business, or if it's a case where you have an opportunity to expand your business, is this the good time to do that? Are you ready to do that? That kind of thing. So those are kind of a basic thing to keep in mind. And the other point that I wanted to mention, and I wanted to thank the one that I sent an introductory email yesterday to I hope the majority of you. And I got a response back from a person who is operating a seasonal business, and that required some editing on my part this morning, because one of the things I wanted to mention is, or I hadn't thought about that much, was the business you're planning on operating. Is it going to be a full-time business? Is it going to be a part-time business? Is it going to be one of the vernaculars you hear right now is your side hustle, that kind of thing? So, and also related to that, is it going to be a seasonal type business? Because some of the SBA loans and lending that I did were to water ice and pretzel franchises that were located in different spots on the Jersey Shore. So I mean, there's, the kind of the perfect example of a seasonal type business, and one where you certainly need to be aware of your costs and the need, which we'll come to later, the need for a reserve or a nest egg or whatever, emergency fund, whatever word or phrase you want to use. That's what you're talking about, because you need to have something like that available to cover you during the periods when you're not able to operate the business. So as I said, this is like just a snapshot, a snapshot of the business model canvas. I don't want to go into a whole lot more detail, and as I said, I encourage you to follow up with Kathleen Donahue for the workshop that Kathleen's going to be doing later this month. And that information, by the way, the registration information will be available on our website. All of you who are registered for the workshop today should be receiving information about that going forward. Let me move forward to, wait a minute. It helps when you click the right way. The BMC provides a structure of a business plan without the overhead. I like this, the improvisation of a back of the napkin or the last page on the loose leaf binder that you're working with, or whatever it might be, or even maybe in some cases the back of your hand. But it's most useful as a diagnostic tool. It's also useful for the advantages you see: focus, flexibility, and transparency. One important thing to keep in mind is the BMC is not written in stone. I mean, it's a document that you start to prepare, and but we all know things change. Stuff happens, let me put it that way. And so use it as a guide. You will start to work on it, and there will be other things that you'll think about, and a light will go off, and you'll say, oh yeah, I didn't think about that, or I didn't think about including that. So as I said, once again, the business model canvas it's a working tool for you to use in starting and or operating your business. And I know, I'm rehashing a little bit, that the BMC, not a business plan, nor does it replace the business plan. And it's not a shortcut. This is I'm not going to call it arduous, but it takes some work. I mean, it's not something that you can sit down and knock out in maybe half an hour. And it also would be helpful when you can, if there are people that you speak to who can give you advice, if you want to call them consultants or professional people that you go to for advice about things like that could be helpful. It would be worthwhile to maybe get their thoughts about this. And finally, the business, it's not useful in seeking funding. And once again, I need to reemphasize, these are kind of my thoughts based on past experience from what I've done. My focus when I was doing SBA lending was always on the business plan. the plan would cover some of the plans that I saw would cover some of the information that was in the business model, but my particular focus then was the business plan, because that's what I knew people were going to need to use for funding. And I'm going to take a break for a minute or so, partially to grab some water. And secondly, I know I've kind of thrown a lot at you so far, and I'll give you some time, a minute or two, if there are any particular questions, or gather your thoughts, and maybe questions can come from there. But just a bit of a break for a minute or two to maybe jot down some questions. I see some questions have come through already, but just take a couple of minutes to see if there are any additional thoughts or things that you might want me to follow up on later.
Yeah, this is Ed Torello. I'll be presenting you with the questions. And so we'll give you a second to have a drink of water or whatever else you want.
Yep.
And we move forward. We have a question already. It says, how do new business owners do the projection parts of the business plan regarding revenue? Do we do an estimate of what's needed? And how can we do an assumption that with startup businesses?
Well, as far as the revenue is concerned, it would be trying to place a value on either the product or the service that you're going to be selling. If it's a product, you can think about approximately what the cost might be for if you went to the store to buy that particular product or a similar type product. If it's a service, the guide that I've used before, and this is a case if you're talking about someone that's going to be providing a service where they're going to be billing on an hourly basis, the advice that I've gotten from people before is take what your hourly rate was when you were working as an employee and double it. And once again, this is an individual situation, and it depends on the particular person's comfort level in being able to sell that price. But keep in mind, when you're working for yourself, you're not only selling your services, but you also have tax obligations that you're going to need to be responsible for, whether it's personal income tax, Social Security tax, state income tax, and all of those amounts need to be coming from the billings that you do. In a couple of cases, there are people that I've spoken to that have maybe said, well, I'm just starting out, Dick, and I'm a little uncomfortable. Let's say my hourly rate was 50, as an employee was $50, and I'm a little uncomfortable with doubling it to 100. Maybe I should start at 65 to 70. And actually, now that I think about it, that's a real life example from one of the clients that I'm working with or have worked with. So he started out, his initial billing rate was $65 an hour. When he rolled into his second year of operation, he increased it to 75. So, once again, as with a lot of the points that I've made, there's no hard and fast rule. A lot of it is your personal reaction and what you think you can sell your service or the product for. As far as the assumptions are concerned, the assumptions support what information is being shown on the projected results. That's where you actually list. You don't, if you were billing for, let's say, per hour, you wouldn't necessarily, you just give a dollar amount. Here's what I'm thinking my billing rate will be for the particular service. I hope that's kind of answered the question. I wanted to move on, Ed, if that's okay with you.
No, we are. Yeah, no need to. We've got a bunch of questions here, so we have to keep rolling.
Oh, really? Okay, well, thank you. All right. So
keep you on track. one person wants to know the Bucks County's website. You know what that is, don't you?
buckscounty.score.org,
Okay.
the website.
That answers that. Now, here's another one. I'm considering a pop-up retail shop over the summer to test the waters, so to speak.
All right.
Do I follow the same planning? I hope it turns into a full-time retail business. So,
I would say yes, because let's look at it from the positive standpoint. You're going to use this as a start. You're going to need, once again, I'm not supposed to tell you what to do. Let me rephrase it. It would be very worthwhile, I think, for you to follow that process. Because if this does turn into a business for you, you will have already done the groundwork to prepare for it. Let me put it that way.
okay. Yeah,
All
that
right.
makes a lot of sense. Okay, the next question is, so
Oh,
I have an LLC. I set it up mid last year. I'm having a problem with getting funding because of my personal credit. Where can I find lenders that deal with this issue?
okay. All right, Ed, all right, I'm going to cover this. I'm going to cover personal credit because I'm going to be shifting now
Oh,
from
you
business planning to financial planning. And I'm going to be talking about personal credit.
okay, so why don't I stop the questions
Yeah,
here?
do me a favor. Yeah, and
Keep on going. I didn't realize that you were finished.
well, okay.
Finished, rather.
Some people
Okay, good.
might hope I was finished, but anyway,
Yeah.
that's a whole other
All right,
story.
so just keep on going then.
All right, fine. Okay, here just to some of what I refer to as kind of nuts and bolts type items, as far as making it memorable for the name of your business. Most people, or not most, a lot of people that I've talked to name their business after their children. They combine some of their kids' names, and that becomes the name of the business. Or if it's a husband and wife, they combine the husband and wife, or usually sometimes it's the reverse. Whatever the case might be, you don't want, those are some of the sources that people have used in naming their business. Make it pertain to what you do. If you can, so and so, like the Dick Kroger personal services type business, for example. If I were planning on being a personal concierge or some type of business like that, if you can, try to include in the name of your business the type of service that you're planning to offer. Here's the link, verify that it's available, the link that you can go to make sure to find out if your particular name, the name that you'd like to choose, is available. And the domain name, the link for the domain name. Register your business structure. Here, you need to register with the state of Pennsylvania, or if you're in New Jersey, obviously with the state of New Jersey, either the name of the business, or if you're going to use a fictitious name like a DBA, doing business as, you need to register that name, because if for no other reason, you're going to need to produce a copy of that registration document to the bank or to the credit union that you go to set up your business checking account. State tax accounts, local municipalities, and also here's another basic, and it's a piece of information that you're going to have to apply for. That's your federal EI number. That's your federal employer identification number that's coming from the IRS. So if I shift to financial planning, we now have some of the basics that I mentioned before. Open a company bank account, open a state sales tax account. And here I need to, one of the jobs that I had in my previous life, this was while I was going to night school at Wharton, was I worked for the state of Pennsylvania doing sales tax audits. And one of the things that I learned is that the responsibility for charging, collecting, and remitting the sales tax, whether it's Pennsylvania, New Jersey, or any state that charges sales tax. If you're going to be charging sales tax, you're obviously a retail business, obviously you're going to be charging tax. You need to register the business for sales tax purposes, because if for some reason you collect the sales tax and you stop paying it, there's a fiduciary responsibility that can go right through the corporation to you individually. It's the same type of situation with people that you see from time to time in the news who have had to close their business because they haven't been paying their payroll taxes. The same fiduciary responsibility exists to collect those taxes and remit them to the local taxing agency. There are real life examples that I can give you of people who've lost their businesses because they collected the tax and they used that money as a substitute for working capital or to pay the working capital needs they have of the business. So just be aware, if you're going to, with what you're doing, you're going to be charging and collecting sales tax, be aware that you need to make sure to register with the local taxing agency. Comply with all federal, state, local, county laws and regulations. Obtain the right amount of insurance. And here you'll need, depending on the type of business you're planning on operating, you need, and those of you in the audience who own businesses already, you know, you need commercial insurance. Commercial insurance officers, the E&O in type of insurance to cover you in case, you know, God forbid something happens, something unexpected happens. You need to make sure that you have the insurance coverage that you need. Whoops, sorry, I got ahead of myself. Oh, and use a bookkeeper, accountant, attorney, banker, or insurance broker. Here's where you need to try to, or be aware of the need to try to develop relationships with professionals like this that you can go to when you have a question that's outside of your business or you're not sure exactly what to do. Obviously, a bookkeeper, CPA, that's pretty straightforward because you're going to need them to help prepare the tax documents that you need. An attorney, I always recommend that people work with a business attorney, one that specializes in forming LLCs for businesses, is experienced in corporate law, and also best case would be that does commercial real estate transactions, because there will be, we hope, opportunities for those people who start their businesses and maybe start as a home-based business to, over a period of time, grow to the point where you can take it out of your business and either move into a leasehold situation or even a potentially purchase commercial property for the business. There you need attorneys who are experienced in commercial real estate transactions. If somebody says, well, my brother-in-law is a divorce lawyer, I've said, well, that's fine, but ask him if he can give you a referral to an attorney that might be much more helpful to you. From the banker standpoint, it still is a challenge in some cases to be able to go into your local branch. And as far as the banking world is concerned, the folks in the branches can be helpful to you, but when you apply for a loan, they're not the decision makers. They're the people that'll collect your information and they'll feed it further up the food chain. So when you have a need to apply for funding, try to find out who the business banker is that covers that particular branch, or best case would be, depending on the dollar amount that you think you might need to borrow, the commercial lender that would work, because he or she usually work hand in hand with the business banker at the branch level. So it can be worthwhile to at least know who those people are in your particular location and try to develop relationships with those folks. And the business management software, I mean, that's a given. I mean, there really isn't, I mean, you can't operate right now without that. Some basic concepts as far as business planning is concerned. You can see the information that I have on the slide. One of the points that I wanted to mention about this is, especially if you are going to, in addition to what's here, it talks about the well-documented financial plan to attract potential lenders and or equity investors. Just remember that, or be aware that there are two different elements. The lenders provide debt, investors provide equity. So when you're getting to the point of growing your business, or maybe even bringing into the business an outside person, understand what might be happening. The lender, if you borrow money from them, banks are kind of funny about wanting to get repaid for the money that they lend people. On the equity side, it's how much of the business are you going to have to give up in exchange for the funding that you get. So just be aware, two completely different types of funding. One is debt, one is equity. And let me move. Okay, all right. Are your personal finances in order? Have you made a personal budget? Is your credit score at a desirable level? One of the things that I always encourage the clients, and even when I was doing SBA lending, to do is get a personal credit report for yourself. First of all, you're entitled to a free one every year. Get a credit report from the bureaus to find out what your credit score is, number one. And are there any discrepancies? Is there anything on there that shouldn't be there? And also, is the information on the report yours? Because I can't tell you the number of times, especially with people with a common last name, where we'd be going on, my credit people would call me and they say, Dick, you're not going to believe this person's credit report, and so on and so forth. You've got to be aware of the importance of your personal credit in terms of financial planning for your business and the operation of your business. First of all, if you think you're going to be leasing space, landlords right now in some cases are requiring a personal credit report as a way of making them feel comfortable about if the person is able to manage their personal debts, that they are going to be able to make the monthly rent payments. The other thing is, if you're going to be applying for funding, the first line, or up at the very top of the form on the application, you're going to need to provide your Social Security number, because the first thing they're going to do is get a credit report for you to find out what your personal credit looks like. And that's the first hurdle you're going to have to overcome in trying to get funding. So I can't emphasize enough the importance of your personal credit score as part of the component of your financial planning for your business. One of my associates asked me a while ago, he was working with a client who had some personal credit issues, and he asked me, well, do you know what, well, you know, you were in banking, Dick, do you know what makes up somebody's personal credit score? And I thought I did. So I had to do some digging and a little bit of research. So bear with me for a minute, because and I'm just going to quickly read from this. The components of a person's personal credit score are a person's payment history, that's 35%. Comparison of outstanding balances to credit lines, that's kind of your DTI, that's 30%. How long someone has used credit accounts, 15%. And the types of credit outstanding and the number of credit inquiries, each of those are 10%. So you can see 65% of the numbers or the rating that goes into someone's personal credit score come from their payment history, which is an indication of payment, of paying your bills on time, and the dollar amount of credit that you have outstanding. So, can you manage your debt, and have you set aside a nest egg to get you through the startup period? And here, my comments here are, what amount do you have available from your own personal resources as what I would call capital contribution, what could be called skin in the game, whatever the particular buzzword or vernacular might be. What do you have available in your own resources to start your funding for your business? And where are they coming from? Is it coming from the cash in your accounts? Is it coming from savings accounts? Is it going to come potentially from home equity? Is it going to come potentially from a withdrawal from a pension plan? Is it a case where you maybe have gotten gifts or some other type of outside income that you can use to start your business? My own personal opinion, which not everybody agrees with, as you can imagine, is if you've operated a business for a particular period of time, and let's say you've gotten past the early stage or startup period and you've been operating for 3 years, 4 years, or even longer, you need to have a working capital line of credit. The dollar amount to me is immaterial. It can be 20,000, it can be 50,000, it can be 100,000. But you need to have a working capital line of credit that you can fall back on in an emergency type situation, or a situation where you have the opportunity to maybe make some large purchases and take advantage of purchase discounts. But what is the nest egg that you've set up? How do you plan to fund the initial startup costs for the business? Because you can apply for, but it will probably be difficult for you to get 100% financing for what you want to do. When I was doing SBA lending, one of the very first forms that I would ask people to complete in the what some people will call voluminous amount of paperwork for an SBA loan, but the first form, it had 3 columns. First column was total project cost. Second column was capital contribution. Third column, loan proceeds. And obviously add them up, and total project cost was A, capital contribution was B, and loan proceeds were C. So A minus B equals C. That would give my credit people an idea of the dollar amount that the person was going to need to borrow. But it was also, to me, a worthwhile exercise, once again, to kind of dovetail back to something before. Where's the money going to come from to help get this business started while you're trying to generate revenue? How are you going to pay for the expenses that you're going to incur before you start to generate revenue? There are a couple of other points to mention here kind of briefly. There's personal risk tolerance factors into this risk factor, and also acceptance of risk. Are you willing to accept the risks, both personally and financially, of opening and starting a business? Once again, not something where there's one concrete answer. It's something that each person needs to answer on an individual basis. It's something you really need to keep in mind, and it's something you need to be comfortable with. Is my spouse or significant other willing to be part of this, or willing to support me in what it is that I'm willing to do? I can't tell you the number of conversations I've had with people where they want to start a business, they need to borrow money. There's virtually no collateral coming from the assets of the business. So my credit people would ask for or look for a mortgage on a home, a second mortgage, or maybe even a third, as additional collateral. And the response that I got when I bring this up is, well, my wife would never agree to that, or my husband would never agree to do that. Well, these are conversations that you need to have. To me, these, and in some cases, frankly, they were deal killers. But to me, those are conversations that you need to have with someone early on. Kind of, are you willing to help me? Are you willing to support me? Are you willing, both emotionally, financially, whatever the case might be, to help me get started in this particular business and pursue my dreams? Next slide, and here are some of the slides that it says we cheerfully borrowed from, but it also mentions some of the things that sources that you can go back to. I talked about the business model template Canva example. Certainly there's information at sba.gov that you can go to. I would encourage you all, when you get the chance, to go to our website. Once again, to come back to the shameless plug, buckscounty.score.org, and take the link for our library for all of the information that we have there that could potentially be helpful to you. Certainly, I'll open the door a little bit. You can certainly come back to me either by phone or by email with anything that I might be able to help you with going forward. I would be willing to do that. Finally, and this isn't on the slides, there are certain sayings that I've heard or been told over a period of time that have been helpful to me from time to time. And I have too many to share with you right now. And I'm also, as I see, kind of up against the clock. But I just want to quickly say, first one is that a goal without a plan is just a wish. Second, failure to plan is planning to fail. And the third one is that procrastination is the thief of time. I'll just quickly go. A goal without a plan is just a wish. Failure to plan is planning to fail. And procrastination is the thief of time. And on that note, and my final one, this is an oldie but a goodie, and it's my absolute favorite, is that, and I know some of the people on the call have heard this before, so get used to it. But my favorite is that nobody is completely useless. They can always be a horrible example. And on that note, I would like to thank you all very much for attending, and look forward to trying to answer or follow up with some of your questions. Thank you.
Right. Thank you so much. Thank you, Dick. I've got a bunch of questions in front of me, and we only have limited time, so we'll move along. I'd like to bring up the other question that we had before, which was, I'm having a problem with getting funding because of my personal credit. Where can I find lenders that deal with this issue?
Well, the first, depending on the person's personal credit score, in this market, and for purposes of right now, I'm going to use 700 as a guide. If you're above 700 in a personal credit score, you could be able to get funding. It's maybe might cost you more as far as the interest rate is concerned. If your credit score is below 700, heading towards 650 or even below that, first thing I would do is go to, there's the credit count. There's a nonprofit volunteer organization called the Credit Counseling Center with offices in Bucks County. I would Google Credit Counseling Center and see if you need to contact those people that could be helpful to you. I would also caution people when you're talking to people about talking to banks or credit unions about funding. Be careful who you talk to, because as I said, the first thing they're going to do is want to get a credit report for you. And if your credit score is 750, each time they request a credit report for you, there's going to be a slight reduction in your score, maybe 3 to 5 points. If your starting credit score is 750, it's not a big deal. If your starting credit score is 650 or 660, so could be a big deal. So I would encourage you to try to develop a relationship with a lender or a bank that you think is going to be helpful to you. and tell the people up front, be direct with the people, because nobody likes to be surprised. Be direct with the people and say, listen, I've had some issues on my credit report. Is that something that's going to be a deal killer? Or ask the people, listen, what's the minimum credit score that you look for from an applicant before you can approve them for funding? I mean, those would be suggestions to follow up on right off the top.
All right, great. Got another question. If I'm going to open an additional location, can I use the income and expenses from the current location as a projection?
You can certainly use them as a guide. Yes. I'm assuming it's going to be a second location that's going to be comparable to what they're doing now. So yes, you can use that as a guide going forward.
Okay, here's another one. I am partnering with a friend who will sell different products in a retail setting, but will complement my products. What is the best way to partner financially with sales/sharing profits?
That I'll come back to. You need to come back to the comment that I made about a business attorney. You need to have more than likely some type of partnership document prepared that spells out specifically who's supposed to do what and how much are they supposed to pay for it. I would check with try to get referrals of try to get referrals of a business attorney that can help you prepare that type of document, because you need to have something in writing to protect yourself and to prevent problems down the road.
All right, here's another one. Can you charge taxes for services?
Well, it depends on the service.
Yeah,
You're going to, well, I'm sorry. You're going to have to do some research to find out, to identify the service that you're going to offer and whether or not it's a taxable service or not. That would be going to the, if it's Pennsylvania Department of Revenue, to find out if the service is taxable. And if it is, then in Pennsylvania, it is the rate is 6%.
All right. Here's a question. What about having food business in your home? I guess it's how do you sort of segment the business from your home in terms of space and allocation of electric, et cetera, et cetera. Well,
that's
would seem to me like you need a detailed almost business plan as far as space, time, and all of that.
Well, yeah. And the other thing too, the other thought that I have is, depending on where the home is located, you've got to find out if that's going to potentially be a problem for the local municipality operating a business out of your home. I mean, I know there are a lot of people that do home care. In fact, there's some in the street here where we live that do home care from their homes. Do the people in the township know about? I have no idea. But once again, you need to protect yourself to not be blindsided sometime later. And the other thing too, you might need to talk to the insurance person as far as potential coverage for what it is you want to do. I mean, if you're planning on operating a food business out of your home where you're preparing food and it's going to be distributed by trucks or by Amazon or by whoever, having a bunch of vehicles coming up the street, I don't know if that's going to be the best way to do that. You'd need to probably allocate. You're going to have, if you do that, you're going to need to allocate how much of your personal residence expenses apply to the business, both in terms of size for the business and also expenses, whether it's utilities, insurance, whatever the case might be.
I have a client who had a similar thought in terms of opening a business in their home.
Mm-hmm.
And I recommended that he speak with the local zoning officer.
Yep. Yeah.
And actually proved out to be a very, very good idea, because he asked him a series of questions in the sense of what you're allowed and not allowed to do. And once that happens, and and he doesn't give you pushback, he'll send you a package of material that you can fill out. But if you're not living in the proper zone, or if you're not zoned properly, you can run into a lot of problems.
Yes, you're right. Especially if you're in it's a challenge operating excuse me, a business from your residence. Yes.
One of the things they don't want are people coming up to pick up the product at your house. It's one thing to have Amazon pick it up once a day and distribute it for you. It's
Right.
another 47 cars to come down the block.
That's one of the things I was thinking about. You're right.
Here's another question, which I think is very interesting. If I use equity investors, do I pay them back over time, or do they share profits during the life of the business? I'm not sure how this works.
That's going, excuse me, that's going to depend on how the document, well, first of all, it's going to depend on how the investors want to be repaid, number one. And secondly, it's going to depend on the language in the document that's the prospectus, if you would, that's going to be prepared, outlining, pardon me, outlining the dollar amount of investment and how the investors are, not only how the investors are going to be repaid, but when they're going to be repaid. Are they going to defer payments for a period of time? Are they going to look for an immediate return? It used to be equity investors equity investors would be looking for a return within 3 to 5 years. Angel and what are called angel investors sometimes want their money back sooner. But all of that, I mean, it's good in a way that there are investors who are willing to invest in your business. But once again, I'll come back to what I said. It depends on how much of the business you have to give up to get the funding that you're looking for. And the other thing too is what are the terms the investors are looking for? There is no hard and fast rule that I'm aware of. It completely depends on the situation, and everything needs to be documented in writing, both between yourself and the equity investors.
Yeah, I'll just add, if you better be very careful and have legal help in preparing all the documents, because at the end of the day, you might find that they may own 51% of your business and decide to sell it. And you have no.
Ed, you're right. Yeah, you need. Yeah, these are legal documents that need to be prepared, and that everybody understands the language in the documents.
Right, right. Most people, I believe, think the equity investor puts money in, they get a return, and then they take their money and leave. That's not always the case, and you have to make sure that everything is spelt out in the documentation.
Absolutely, yes.
Here's another question. How much of my cost should I really have in the bank when I'm starting my business? Should it be 3 months, 6 months, a year? So that this way I'm not blindsided by business going, businesses don't come in steady. It's up and down.
Right, yeah. I would go back to the example that I used of the 3 columns: the total project cost, the capital contribution, and the loan proceeds. And I would look for a minimum capital investment of, say, 20%. So if the total project cost is 100,000, your quote skin in the game unquote would be at least 20,000, and you would look to borrow 80. That's a lender's decision. Way back when I first started getting involved doing SBA lending, we would do deals where there was only a 10% capital requirement. And they're still, with some changes that were recently made in the law, no, that's the guarantee, I'm sorry. That's a lender's decision. What their comfort level is for a startup or for a business acquisition. But I would say right now a minimum in this market would be at least 20% of the total project cost.
Okay. And would you say that, assume I have my business up and running for a year and I kind of know what my expenses are, but
Right.
just to make it on the safe side for myself, should I keep about at least half a year's worth of expenses just in the bank on the side in case something goes wrong? So I won't, in a sense, go bankrupt, you know?
Yeah, if you don't have a line of credit or haven't qualified yet for a line of credit to fall back on, for both the business, from what I've read and seen from both the business side and also on the personal side, to come back to an emergency fund, they recommend that you have a 6-month worth of income set aside to cover those particular expenses. Yes.
Right. Yeah, you didn't cover it, but in one of the prior webinars we did, getting a line of credit as soon as you can, within reason, is something that most people should consider. How do you?
Yes,
When,
they should. Yeah, well, that's kind of what I did mention, that to me, every business needs a line of credit, should have a line of credit available for them. First of all, for emergency type situations, but also too, it's a reflection of the performance of the business, that they have been able to operate for 2 years, 3 years, 5 years, or longer. That it is a quote existing business unquote, as opposed to a startup or an early stage type business. Yes.
also might give confidence in the people dealing with you that you actually have a line of credit. Therefore, the bank must think you're worth more than zero.
Well, yes, and also too, you've gotten past the startup phase. So, all things being equal, the business should be at the point where they could qualify for a line of credit of whatever the dollar amount might be.
This is sort of generic for us here at SCORE. And if Linda is on, I'd like her to answer that. If not, certainly yourself. What is the mentor program process like? I'm interested in signing up and being matched with a mentor. I understand that you can't tell us what to do, only advise and guide,
Yes.
but wanted to be more familiar with how it works. So I thought our chapter president could handle
I'm
that.
here. I am here.
Linda, you want to take that?
Oh, sure. So the process is you go onto our website, www.buckscountyscore.org, and hit the button that says request a mentor. What that does is put you in the system. You'll fill out a form that gives all your information, put you in the system, and then our operations chair will assign a mentor to you based on the request that you make. If you describe your business in a little bit of detail, or something you're trying to do in the little paragraph that we give you when you're signing on, he will try to match you. So when the mentor gets that request, he looks at the request, and he or she pulls in a co-mentor. And what I like to do is when I get a request, if I read the background of the person who's asking for the mentor, and I look at the request and the type of business they're trying to set up, I then pull in a co-mentor that I feel could best help based on their backgrounds. We then contact you and discuss how we approach your business. We run through the basics. If you're setting up a new business, we run through the basics. We all follow the same basic outlines, but we tailor it to your needs. So as we go through the process, if there's any other expertise that we feel we need, that because oftentimes what you put in your original statement is not what it turns out to be. So we then can pull in different experts as we go through. That's the benefit of having 50 people in the chapter. And actually, we can even go further than that, because SCORE National allows us to go wherever we need to pull in the expertise that we need. And so that's basically the process. That it can go, you can have as many sessions as you feel you need. I've had some clients for the whole 4 years I've been involved in SCORE. So there's no expiration date on your SCORE mentoring sessions. And that's how it works.
Great. Thank you, Linda.
You're welcome.
I know you were ready. So you had a question. So first of all, we're right at our appointed time, and I want to thank everyone for joining us. And also check the calendar. You'll see a whole lot more of these webinars that we have planned for you, and all of them should be able to help you. As they mentioned in the beginning, you'll receive a transcript and a copy of the slides. So everything will be sent to you within the rest of the, I guess, by the end of the day. So again, thank you very much and have a really nice day.
Thank you, everyone.
Thank you. Thanks, everybody. Take care.
Bye-bye.